So here is a daily chart of CANF, a huge runner over the past couple of days, from last Wednesday when it closed in the high ones up until a high of 785 on Friday afternoon. And unfortunately, this is one that got me for a huge loss. I ate about a $105,000 loss on my first position on it. I did try one reshort, lost another $10,000 on that. And this is now the third ticker that I've lost six figures on over the last 12 months. Which is just absolutely absurd that I have to say that, because you would think that after LAKE or after PBMD, I would learn my lesson. But unfortunately, I just keep falling into the same mistakes, the same patterns. And even though I know what I'm doing wrong, I just have been unable to fix it. Now, CNF, let's just take it day by day here, and I'll just try to explain what I was thinking in the moments and where I went wrong. Part of I know what fueled this mistake for me was the fact that I'd gotten very frustrated over the last couple of months. I had taken most of the summer off from trading, and when I came back, I was doing a better job of cutting my losses, but still not the best job in the world. I was in this trading pattern where I would, say, make a $500 gain and a $2,000 gain and another $2,000 gain, and after a few trades like that, all of a sudden have a $13,000 loser. So we're talking more medium-sized losses, but the losers were still much bigger than my winners, and one bad trade would wipe out 5 or 6 good ones, and that's very frustrating, and that means that my risk-reward is off, and I still was getting stubborn, even though I wasn't letting it get quite as bad as I had been in the past. And unfortunately for me, in both of those cases where I ate those losses, I would watch the ticker fizzle back off later in the day, and I'd say, oh, well, crap, if I just held, I could have gotten out for break even. That's always kind of how this starts for me, is I see myself cutting a loss and trying to stay safe, even though I am cutting it later than I should have. But then I hindsight it and I say, oh, well, it could have been break even. And that just sets me up for the next trade down the road, where it encourages me to be stubborn. It encourages me to try to wait for that bailout pullback like the others might have given me. And then that one comes along where that pullback just isn't there. So my September trading, it had started well enough. I had gone on a bit of a ride with ACI that I wasn't too proud of, but I'd gotten out of it okay. And after that ride, I still knew that, hey, my risk is too big. I think that I was probably down about $50,000 unrealized on that at one point, and turned it into about a $25,000 or $30,000 winner. So the last 2 weeks especially, I was really trying to make a focused effort on really starting in with a smart risk and sticking to it. I was going into trades, and every time I go into a trade, I know the point on a chart that I want to risk off of. If you haven't read my blog post on how I determine my risk, check out tradetheticker.blogspot.com. Go through my FAQs. Look for the one about how I set my risks, because that is still the method that I use. The problem is that I usually don't respect them. But anyway, I had made this very concentrated effort to go into a position where my starter size was risking no more than $2,000. And if the trade wasn't going my way, I had to cut it. And all of last week and then the first 3 days of this week, I'd done a great job. My losses were much more in line with what they should be. I was maybe losing $500 here or there. I think my worst loss might have been about $1,800 in that time span. And over the course of those 8 days, I think I tallied up about $36,000 in profits. So for trading smaller and for really trying to use a tighter risk, I was doing great, and I was really happy, and I was really feeling good about my trading for the first time in a while, because I had gotten my risk under control. So that's a big part of what makes what happened to me Thursday and Friday that much more frustrating, because I actually had been doing a good job. I had been working hard to change my bad habits, and then I just let myself slip right back into them, and it turned into a colossal mistake. So CANF on Thursday, let's start there and just go through what was going through my head and what I did wrong, looking at the 1 minute chart. So of course, CANF, it was a big gap up at pre-market, and it was day one. It was gapping big, but it had opened up about 8% off of its highs, I'd say, somewhere in there, which I consider to be a pretty low open compared to pre-market highs. And charts like that, I have been tracking them. I have been trying to monitor them. And some of them, they do come back and squeeze, but the vast majority just fizzle off and fade all day. It's something I've been working on in my spreadsheets and really trying to keep good track of, because I'm looking for an edge there. I'm looking for a way to figure out which ones of these day ones are good shorts. So CANF, I did have that short bias because it was opening kind of far off of its pre-market highs. And my first trade on it, I think I got some short right near the open. And I had covered a few pieces into the morning dip, but then it had this big surprise squeeze back on me. And I didn't panic out into the strength and when it perched just through high of day, but I was pretty careful about covering into this fade. And when all was said and done, I was out my first piece of CANF, I think for a small loss. I might have had some ads down in here that put me a little bit underwater on it. But I remember I hit about midday on Thursday. I think it was right around noon or so. And I was up maybe $500 on the day. I had lost $900 on CANF, but I'd had small gains elsewhere. So really, it's not like my CANF debacle started off with being deep in the hole or anything like that, or feeling like I had to make up for something. I was green on the day. I mean, it was kind of a slow day at that point. It was a little bit boring, but I mean, I was doing fine. I was up. And then for whatever reason, I just couldn't shake the short bias in my head. It was just one of those cases where I got too biased and was just making too many assumptions about what the stock could and couldn't do. So after this fade right here up until about noon, CANF, it did start to perk up. And into this perk, I started to get interested. I thought that it was probably going to be lower highs around 240 here, and then just fade back off, maybe get the lower day crack into the close and just close back down in the ones, hopefully, or the very low twos. So I started shorting into this pop, and I was really risking off of about this 250-ish area. That was my plan when I entered the trade. It was short down in here with these two perks that had failed as my risk. 247, I guess it was exactly. So I only had 10,000 shares to start, and that was well within my risk. I think my starting average was in the 230s somewhere. It was maybe 235 or 236. So 236 entry with 10,000 shares with a 247 risk level, I was risking just over $1,000. And at that point, everything's great. Everything's totally acceptable. And then it had this perk through 240. And at first, the perk topped out right near this 247 area. I think it perked through by maybe a penny. And for whatever reason, I decided right there to use that as an ad. I assumed, hey, this is going to fail. And I threw 20,000 more shares at it. So now I had 30,000 shares from a low 240s average. And you know what? It's an add into strength. It's an add into resistance. And I don't regret the ads. The ads are not the problem. The problem is once it broke through the 250 area and was holding, I didn't recognize that this stock was strengthening. I didn't respect my risk. So I'm sitting on 30,000 shares from the low 240s. And even at this point, when it's up in the 270s, I mean, yeah, I'm down $6,000. That's not ideal. I've already let it go further than I should. But that's not a colossal loss for me. That's not a number where I should just be saying, hey, I'm going to dig in my heels and fight. Not that you should ever be doing that anyway. But I just became bound and determined to fight this stock for no real reason whatsoever. It wasn't doing what I expected anymore. It was definitely trending upwards. It even gave me a pullback here around 145. And let's just scroll to the right a little bit, where it dipped under 250. And this is that bailout pullback that I, usually on my big losers, I look back on and I say, what on earth was I doing? Why didn't I at least downsize? Because it gave me just about break even here when it cracked under 250. But I just kept on sitting and staring at CANF. And instead of seeing the chart for what it was doing, setting higher lows, it was holding above its VWAP at this point, and it was just not at all behaving like the stocks that do crack and fade off. I just dug in my heels and I said, you know what? I don't care. And I have a trading buddy who I talk to every single day, and I was talking to him about it, and he cut his loss. He was taking a similar play as me, but he cut his loss up into this like I should have. And for whatever reason, I just kept on holding. And I even said to him, I'm bound and determined to fight this, and I don't really know why. I recognized it in the moment, but I just sat there and I kept watching, and I kept making assumptions about what CANF could and could not do. And part of it traces back to the daily chart, because when I looked back on the daily chart ever since this big gap down, and I looked back at when there had been days with volume, it had this big volume day on April 27th where it topped out at 358. And I just made the assumption that, hey, CANF, even if it does keep running a little bit, even if it does squeeze through 3, tomorrow morning, hopefully we just get a perfect short into resistance up near 350, and I can just hammer in size into that, get a fade back, and I'll be okay. Never even occurred to me that maybe 350 breaks, maybe it gaps up. again, just making assumptions and turning the trade into a gamble. So back to the intraday. Once I had made up my mind that I was going to just fight the stock and not really care what it does anymore, I really just took my eye off of it, to be honest. Like, I knew I was kind of in a bad situation. I was frustrated with myself for being in that bad situation. And that actually led to another really poor trade on Thursday afternoon on ADXS, which there was some kind of news. Like, I can't even really tell you what the news was. It was just drug related for all I know. But it had a huge tank from 21 down to 14. And as it was bouncing, I just took a random short into the bounce. And what I'd been doing so well for the past 2 weeks, thinking about my risk, thinking about my size, making sure I wasn't risking more than a couple $1,000s, I completely threw it out the window on ADXS. And I took 10,000 shares way early on ADXS short. I think I was short from the mid 17s, somewhere in there on average. I just blindly shorted into this after the volatility halt because I assumed, hey, it's going to top out, it's going to pull back, it'll probably at least retest the $14 low. And I just had no plan whatsoever of what I would do if it kept going. It never even occurred to me that it might keep going. So I really just lost focus this Thursday afternoon, and I just started making horrible decisions. And that is really one of the risks of trading, because no matter how good of a trader you are, you're probably going to have days like this where you just mentally are not there. And that's what happened to me. And I just took some huge, ridiculous risks, and as a result, I paid for it. So ADXS, once it squeezed me up into the 22s and I was down almost $50,000 on my impulsive short, I had to cover up into this pullback. I gave it a chance to pull back down to my average. It couldn't quite do it. I think my average cover on this was in the 19s, but ADXS, that was a $22,000 loss. And we're talking about a week where the first 3 days of the week, I had made a grand total on all of my trades of about $16,000. So the frustration of having a bad CANF short that I was holding, plus then taking this large realized loss on ADXS, that really just poured fuel on the fire for me mentally. And it turned more into a game in my mind of, okay, how can I make my money back? Like, how can I score big on CANF tomorrow and flip that situation around at least? So back to CANF going into the close, and after that large loss on ADXS, well, at this point, now I had no interest in covering this, even though it was being choppy here in the 280s. And again, I'm thinking back to that 350-ish level. I'm thinking about the fact that this really, all of these high day breaks really hadn't been all that strong up to this point. So I'm thinking to myself, what the heck? I'll just wing it. Let's just see what happens. I just assumed what the stock could and couldn't do, and I talked myself into a stubborn hold. And this is pretty similar to how PBMD started for me, because we'd been in a time where a lot of stocks had only been one-day runners. They hadn't really been gapping up on day two and squeezing much more. So I wasn't really thinking about that as a risk for the next day. And I was thinking, okay, CANF could easily just gap down tomorrow, or maybe, again, it just has that gap up and push towards 350, and I can play off of that risk level. And again, at that point, holding 30,000 shares from a 240 short, that's still not a good strategy. That's a $30,000 risk right there, just on the position that I'm holding and underwater on. So as CANF was closing, I almost wasn't even watching it. I mean, I got distracted by ADXS and that stupid trade, sure, but I remember not even really thinking about it or not really having any kind of interest in it. I was just letting it do its thing and just totally gambling. Like I said, the focus just was not there for me on this day. And that's not an excuse. That's just a fact. And that's a reality that we all face as traders sometimes. It's really unfortunate that I didn't respect this stock more. And then after hours, when I started watching it gap up and go towards 4, that's when I knew, that's the first time it really occurred to me, hey, I might be in trouble here. Because I had never considered, hey, what if it opens above 350? What if it does gap up 20%? And that's what happened on PBMD also, because when I shorted that one early in the 170s or 180s or whatever it was, and the next day it opened in the mid 2s, I was not at all prepared for that. So I was watching CANF pre-market a bit and watching it gap up towards this 450 area, and I don't know. I still kept that short bias in my head. I still was trying to think, okay, how can I turn this around? How can I get a nice large sized short off near the top of this and get out of everything okay? So again, it was just a dig in my heels and fight mentality. I also was justifying it by saying, hey, it's only 30,000 shares. I'll play up to 100,000 shares, whatever. Again, just letting my size get way out of control, letting my risk get way out of control, and putting myself in that position where, my small conservative trading can all get wiped out and then some by just one mistake, one bad trade. But this is the pattern I've fallen into lately, and the pattern I need to break is that I just keep on only playing size when I'm fighting a stock. I'm not sizing up when it's going my way. I'm not sizing up when it's a situation I'm comfortable with and familiar with. I'm sizing up when I'm fighting, and that's what keeps opening me up to these big losers. So CANF, it did open up in the 440 area, had a big spike in the morning up towards 480, and then after the hard crack and slam back down to 4, it started to have some rebounds. And I was putting on size into the rebounds on CANF, and I didn't do a great job of sizing in. I added 50,000 shares more on Friday morning, and my ads, the average, like I said, was not great. I think that I only wound up with a 425 average on the ads. So I'm holding 30,000 shares from 242 and then another 50,000 shares from 425. So it wasn't the best entry to begin with, but I had my risk in mind again, and I was seeing lower highs. And especially once I saw this morning low crack under 4 and it was washing out towards 380, I was thinking, okay, this will be fine. Once again, I just started assuming it's just going to keep on flushing, keep on washing out, and just be a slow fader all day. Because fundamentally, the company's a disaster, and I knew that. I knew people were tweeting about it, and I let myself just get even more biased. I kept looking for reasons to be right rather than looking at what the chart was telling me. So when it had this big squeeze back right here, I just said to myself, instead of recognizing, hey, a chart that's broken and falling apart should not have a squeeze like that. Instead, I just said, okay, well, maybe it just failed again. Maybe it'll just crack later in the day now. It just needs to consolidate more. And then when it barely dipped under 4 and had a higher low, I totally ignored that again. It had this pop right back up to the 440 area. And then finally, it shot through 440 really fast on one big green candle. And I had to cut everything. I had to cut it all right near the high day break, because I knew how bullish of a sign that was. I finally at least recognized I needed to get out there. But my average cover was up in the 480s. I lost 60 cents a share on my ads, so $30,000 on the ads. But the main part of the loss came from that stubborn overnight hold. So right there, cutting everything up in the high 4s was $105,000. And I did try one more short when the $5 area was being really choppy and rejecting it first. I was thinking, okay, maybe this will stuff. And again, I put on 50,000 shares. I think I had a 495 average or so. And when it finally had this perk through 507, whatever that current high had been at about 1140. But once it broke through that, again, I had to cut into the strength. I had to say, okay, this is holding up too well. It's not rolling back over. And I ate another $10,000 loss there. And the rest of the day on CINF, it did have that big squeeze. It did get all the way up to 774. And then crack and fade all the way back down to a close in the 4s. But at that point, I was just too mentally damaged. I walked away for a while when this squeeze started because I was trying to just kind of get away from the screen and refresh a little bit mentally to be ready for an opportunity later. But even once I got back, I was just too scared of losing. I was watching it when it was chopping around in the 7s up here. Had that gut feel like, hey, maybe this is time to short, but too scared of being wrong. Couldn't pull the trigger. And then it had its hard crack. And then into these pushes and these perks, as it started to perk through up here, I thought, okay, this is probably the perk and stuff move. But again, just too scared of being wrong. Too scared of, what if it squeezes back through 7? And again, just didn't have the guts to pull the trigger and had to watch it crack again without me. So, I guess I was seeing it okay in the afternoon, but that doesn't do you any good if you don't push the button and you don't actually make any money on it. So that's what happens after big losses and after you exhaust yourself on the front side of the move, is usually you're not there for the gimmies and you're too worn out and you're too scared of losing more. And that's just part of trading. But the lessons to take away here, and the main thing is just that it's, once again, the main cause is another stubborn mistake. And it's a mistake I unfortunately have made 3 times now. I can look at 3 losses I've had in the last 12 months, LAKE, PBMD, and now CANF, And between those three tickers, I've lost over $500,000. I think on those three combined, the figure's about $550,000, which is absolutely mind-blowing when you stop and sit down and think about it. And yes, I'm very fortunate that my trading has been good enough otherwise to keep me green over those 12 months and keep me up. But man, I'm really costing myself big on these. And it's something I need to keep working on. So obviously I am very frustrated and very upset with myself for making the same mistake yet again. You would think that huge six-figure losses would be a lesson you only need to learn one time, but apparently that's not the case. We all have our issues as traders. We all have our strengths. We all have our weaknesses. And my weakness, and I think a lot of traders' weakness, is stubbornness and fighting stocks going against them and fighting positions going against them. I mean, even though I can't seem to learn the lesson, I hope at least hearing my horror stories helps some of you see the lesson, help some of you realize, hey, you need to cut your losses at your risk point. Because every now and then, yeah, there'll be the occasional one that tricks you. I'll take that occasional $10,000 loss where the stock then comes right back down and I say, oh man, I could have been out for break even. But that's worth it. It's worth it to get tricked every now and then to avoid these big crushing defeats. So going forward, that's going to be my goal. I mean, it's been my goal for the last 12 months, but I'm going to keep on taking more steps to try to just force myself to cut the losses. The step that I was going to take after PBMD and after a couple of those $13,000 losses was I was going to start putting in hard stops. But apparently that's not enough. I'm not pushing those buttons. I really haven't been disciplined enough to put those stop loss orders in. And again, that just boils down to a self-weakness. I don't know what it is about doing that, but I just have a heck of a time with it for some reason. So instead, I'm going to try to take it out of my hands. My broker is Centerpoint. They're one of the best brokers out there, in my opinion. And I believe something that they'll offer is I could tell them, hey, if my unrealized hits $10,000, cut the position. Do it for me. And I haven't talked to them about that yet, but I'm hoping that I'm correct, that that's an option. And I'm hoping that I can just have them take it out of my hands for me. Because I'm going to go back to just doing the smaller risk, risking $2,000, maybe $3,000 on my starters, leaving myself room for one ad to double that risk. And then if my loss is ever at the point where it's at $10,000 unrealized, it should be cut off because it's already past my risk threshold. It's already past the point where I should have cut it in the first place. I just need to get a little bit less worried about being tricked. I need to get a little bit more disciplined about cutting the losers and actually having an oh shit number, as Nate would put it, because that's something I've always stuck my nose up at in the past and just felt like I'm too good for. But obviously I need it. And obviously I could save myself a lot of money by enforcing that. So it's something I'm going to get to work on. I'm going to keep on trying to improve. And hopefully third time's the charm here, and I don't have to come back to you guys with another video lesson in the next few months about how I did it again. I hope you guys could take some lessons away from this. I hope that you can see where I went wrong and how digging your heels in and fighting and playing 10 times the size you normally play can be so dangerous. And just please don't make the same mistakes I do. I know it's far easier said than done because obviously I still struggle with it myself. But anyway, thank you guys who made it this far in the lesson, who watched through my rambling, and I hope everyone can take something away from this.